Hey, what's good, everybody? Welcome to the closing beat. Happy Tuesday. Hey, great day on Wall Street today. We're going to cover it all. If it's your first time joining us, this is the closing beat. This is what we do. We cover the markets top to bottom. We're financial advisors, Jazz Wealth right there. We do long-term investments, manage your long-term accounts, your retirement accounts. So please check us out at jazzwealth.com. But we just cover the day-to-day markets just to keep you updated so you know what's going to happen. Like I always say, I'm not an I told you so guy. I'm an I'll tell you ahead of time guy. I've been telling you ahead of time on some of this stuff. And of course, we'll cover it as we go. Off to your left here, you can see the stock market had a great day. Not quite enough to recover everything it lost from before, but it had a great day. The Dow was up by 2%, the S&P up exactly the same, and the Nasdaq 100 almost hit 3%. Sector-wise, if you look across down here at the bottom, all the sectors were positive today, with I believe 4 of them coming in higher by 4%. 3%. On the upside. So really good day there. We've got the markets to talk about today. We've got earnings to talk about. We've got some news to talk about. Oh man, where do I begin? Okay, so the stock market very strong today. This chart down here you can see is what happened minute by minute throughout the day. We mentioned on our 1 o'clock live show, it's called a trend day, and we said don't fight the trend. This is one of those days where you're going to see the trend do what it does, and it just sort of trends along. Traders call it a trend day because you can't bet on any direction other than what the trend is doing. And today the trend was clearly higher. One thing you'll notice, the blue bar off to the left of that chart shows you the average volume. If you compare it to the down days that we had, volume was very heavy on the way down and it's very light on the way back up. Is that a good thing or is that a bad thing? It's actually a really good thing after a string of down days because it shows you that the selling is exhausted. It's gone. Nobody's left to sell. The reason why on the way down the volume is heavier, meaning people were panicking and selling, really for no reason. And so now on the way back up, buyers are just kind of they're buying a little bit here and there and nobody's really pushing that price back down. So I think it's a really good thing on the way back up here. We're finding out more and more that my sort of, if you go back to last Wednesday, I believe, I pointed out exactly where money was moving from the stock market to the bond market, and that was the reason for the sell-off. I showed you exactly as it was happening. I showed you on the charts how it actually happened. And so we're getting more and more confirmation from the banks that, yeah, that's what's going on. Bond trading is increasing. People are moving money over to the bond market. It's not that people are running away from the stock market. Okay, here we go. Let's just dive in if we can here. So here's the Dow on the screen. Clearly a good recovery for the day. Still has a lot of work to do. It's the best day that it's had since March, but it's hard to get excited about that when everything was sold off so much. The Nasdaq, of course, doing a little bit better, almost recovering all of that Thursday move there. S&P 500 looking good as well, holding the 200-day moving average, at least at the moment. If we look at your sectors today, tech was the big sector performer today. It also took a bit of a hit on the way down. So investors going back to the big tech names that are just oversold. You had Adobe, AMD, Microsoft, Salesforce.com. I'm sure there's others in there. Autodesk, the big tech names all got some good support today. What do we point out? Oh, PayPal. PayPal, Square, things like that. Money coming right back into that. Second best performer today, healthcare. Actually a very close second. So healthcare stocks higher today. You had earnings from Johnson & Johnson. Did I put it down? Johnson & Johnson and United Healthcare. Yeah, United Healthcare on the day. Both very good. We'll cover those as we go here. Other than that, sector-wise, a lot of good things going on. The tech sector, we pointed out, semiconductors, a little bit of a recovery today. Energy higher, but that was the weakest best performer, right? It was the weakest of the day, but it was still positive. So however you say that. Gold down a little bit. Not much to really cover there. Let's go on to the interesting stuff here. Netflix. So Netflix reporting earnings after the close and killing it. Right? So a really good earnings report for Netflix. We said yesterday, and of course a couple times before that, Netflix missed on their subscriber count last quarter. So we track things quarter by quarter. They missed on subscribers last quarter, and I said they never miss twice. Never has happened in history. So there's some point where it's going to happen. But today, the stock is higher after the close here today because Netflix beat earnings by a mile, right? Ridiculous. The subscriber count was actually higher. It did beat expectations. And like we said, they never missed twice. So very positive. I think 12% after hours, doing really, really well. So that's going to help support the big tech stocks going into tomorrow, unless something incredible changes there. So that's the one that's in the news. You're going to read all about it, see all about it. Incredible. IBM. So IBM also reported earnings. Earnings beat. However, revenue was lower. So we mentioned before this whole earnings season started, revenue is going to be the focus. Earnings per share doesn't matter. See, the stock beats on earnings per share, but revenue, it missed, so the stock's trading lower. And it's just that simple. We're going to go through a bunch of stocks today that reported earnings. Great, everything's good, seems good, but revenue was lower, which means tightening margins and costs they're trying to cut because interest rates are going up. We'll go through it. CSX, that's going to be a big one. Big, helpful hand there. CSX beats on earnings and revenue. They reported after the close here just a few minutes ago, actually. Broad shipping growth. They had lots of great things to say there. They are also cutting costs. And this is important for the transports because if you follow the transportation sector, oh, you can't see the chart. If you follow the transportation sector, look what happened. That one took quite a beating on the way down. So to have these transport stocks reporting well, CSX being one of them, that gives light for maybe some of the other ones like your Norfolk Southern, your FedEx and things to maybe see if they can do well with earnings as well. So very, very important, I thought personally, for CSX to report good earnings. Cost cutting, revenue, and shipping growth, all part of the success for them there. Adobe was in the news, although that really kind of happened yesterday after the close. The stock had sold off like 5% yesterday. We covered it here on the show, and then it reversed, right? We sort of announced it when it happened. It reversed course. The news there was that the company said they expect their revenue to grow by 20%. If any company says their revenue is going to grow by 20%, you pay attention to that. So Adobe said that. They also, I dug a little deeper. They said they expect their digital subscriptions to grow by 25%. Remember, they're making a huge transition towards that. So that was kind of interesting there. On to the banks, because yes, we had the banks participate in the rally today. Morgan Stanley reported earnings. Look at this, is really interesting here. So on Morgan Stanley, earnings way better than expected. Revenues way better than expected. Revenues were higher by 15% year over year. So compared to last year, 15% greater. Everyone wanted to see that. They pointed out that bond trading was one of the reasons for their revenue beat, which is important because I made that big statement that money was not leaving the stock market when everything fell. It was moving to the bond market, and now we're getting confirmation. Morgan Stanley said, yep, our bond trading is ticked up. That's the reason for our revenue beat. They also said that the company as a whole just performing, firing on all cylinders, so very good. The stock was higher today. Goldman Sachs higher by 3%. They also reported earnings. Revenue way better than expected. That's great. That helps move the stock higher, of course. And they also said that an uptick in bond trading was the reason for their beat. So these companies are coming out and saying, look, trading activity is picking up in bonds, which is really, really important. So you kind of put these pieces together. If you've been watching for a couple weeks now, I've been putting these pieces together for you. United Healthcare, of course, you see it today. The stock was higher by almost 5%, breaking out to new highs there. Growth in the medical services division as well as their insurance, which is what they really do. They also raised their outlook for the full year. Earnings, revenue, everything looks good for this company. Look at that steady uptrend there. So everything's looking really, 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 really good there. The other healthcare, or sort of one in that space, was Johnson & Johnson. Revenue and earnings beat. Strong growth in the consumer business is their reason for success, they said, for this earnings beat. Looks like it added 2%. If you go over to... That's me singing. There you go. If you go over to the Dow, you've actually got UNH was your big leader today, and then some retail names in there along the way. Johnson & Johnson, I thought, was near the top. It actually finished only up 2%. So you can see over here, if you follow candlesticks, it was higher on the day. It just actually finished a little bit lower. Walmart was in the news today. Some comments about their Flipkart deal there. There was just too much to focus on. I didn't even put it down. Something about Flipkart. JB Hunt, this is a transportation stock as well. Okay, so we were just mentioning CSX. JB Hunt also higher today, 2% on the day. Initially, the stock was lower, right? It ended up recovering, getting about 2%. I'll take it. Revenue missed. So initially, the stock sold off yesterday after the close. It was able to recover on the day. I'll take it, although earnings did beat very much by a mile. They made $1.47 per share. Everybody was only expecting $1.38. Revenue missed. That tells you if there's any weakness here in the markets, people are going to come for that one. They won't forget that for sure. BlackRock. So BlackRock was the other sort of financial company to report earnings. Earnings were great. Everything looked good. Revenue missed. Are you seeing a theme here? You getting the feeling of kind of what we were talking about and now what's happening? So revenue missed. Stock falls 4.5%. And that's, that's what you get. The S&P 500. Look, here's the thing. There's a guy, I tweeted about this. If you follow us at Jazz Wealth, I'm tweeting out just interesting things throughout the day. There's no real rhyme or reason for it. I'm just pointing out things that I come across while I'm kind of talking to people or preparing for the day. The guy from Raymond James, his name is Jeffrey Stout, I can't remember, right here in town. So he literally said this. I wrote it down because he said, the market bottom is in. He said, that's it. That's the bottom. That the S&P will make new highs by the end of the year. He actually thinks 3,000 by the end of the year, and that there are 10 years left in this round of the bull market. That's pretty impressive. Now, this is not a nobody. This guy's got a long track record. He's very, very good. I respect him. That's what he said. He said that the bottom of the stock market is in, new highs by the end of the year, and 10 years left in the market. I'm not telling you what to do. I'm just telling you what that guy said. Tesla settled his deal with the SEC. $20 million comes from him. $20 million comes from the company. A judge basically approved that today. Stock was higher by 6.5%. Where does the money go? You hear about these fines, right? Like the SEC is like, oh, we're going to charge you $20 million and we're going to charge you $20 million. Where does it go? Like, doesn't anybody ever wonder that? Does it go to the building? Surely they make their money and they're able to support themselves not from fines. So when they collect fines, do they give it to the government? What happens? I don't know. I just thought that was interesting. It was the first time I'm like, that's $40 million. Who's handling that check? Who takes the money and says, I got it? Just kind of interesting. Okay, and then some of the other stuff. Look, you got Lyft and Uber. Both of them together are racing to become IPOs. Now, there's a big difference. If you're interested in investing in Uber or Lyft, the two ride-sharing companies, huge difference. Uber thinks they're worth $120 billion. Lyft just hired JP Morgan to take them public, and they're like, $12 billion. Was it 12 billion? 15 billion, sorry. So Lyft says we're worth 15 billion. Uber's like 120, baby. Right? I don't know. Like, are they worth that much? And then the other thing I want to point out is there's going to be a big fight coming up. Health and Human Services is saying, hey, drug makers, you know how a car can advertise itself on TV and it puts the price? We want you to do the same. So if it's Tresiba or if it's, I don't know, what are drug names you see on TV, there's long commercials that take forever. The government now wants the drug companies to put the list price of the drug on commercials. Now, I was talking to the missus about this. Some of these drugs, she named them, maybe I can invite her on the show. She named a bunch of these drugs and she goes, the list price of that drug is $12,000 a month that you see on TV. Could you imagine what that would do if a drug company was like, you'll have a great time and you'll be able to ride elephants again and swing on swing sets and everything will be great, just a little minor diarrhea. Oh, and by the way, it's $12,000 a month. Holy cow. So it's going to be a big fight because the drug companies got a lot of money and they're going to say, no, we don't want to put the prices on there. It's confusing to the customers. So watch these drug stocks coming up. There's probably going to be a lot of volatility going on there. And I think I've covered it. I think I've covered all of it today. Wow. Okay, so there's a lot of things there. Yeah, IBM. Well, I mean, they're doing what they're doing. I mean, it's IBM. The stock's lower, revenue missed. That's the bottom line. The CFO I know was on there. He was talking all kinds of good stuff, but the good stuff is all maybe. The numbers are the numbers. So for the moment, IBM flirting with making new lows there. So you'd have to say it's a little bit dead at the moment. Netflix helped you out, gave you some stats. Hey, you got to trade on stats. At some point, if you're going to be an active trader, which by the way, on the Doe Show, that's what we're talking about all week, you've got to go with some reason to buy or sell a stock. And if the odds are that they will beat the subscriber count for Netflix, that's pretty cool. That's pretty cool. All right, cool. Well, I'm so sorry. There's just so much there. I'll have to maybe catch it another time. Not telling you what to do, just telling you what that guy said. Hey, I got to put it in there, right? I mean, as much as I like to just be the guy that comes and shares information with you guys, it is unfortunately highly regulated. So I have to be careful what I say. 10 years left in the bull market. That's what he said. Yep, Mr. Jeffrey Sout. How do they determine their worth? Evaluation is insane. It is, hey, it could be. Now, Uber started reporting their actual numbers. So they're starting to, that's how you know they're serious. Well, they hired everybody to take them public. But they've been reporting their numbers and what they're doing here for some time now. So it gives you the opportunity to make that decision. Is it really worth it? It's not like a pot stock. They're making money. Okay, that's all I got. Yeah, I didn't mean to take so long on that one. Great day for the markets. I still will suggest that this market does not go straight up, right? If it's going to be bullish from here, that's fine, but expect volatility back and forth. Tomorrow, it looks like earnings are fairly good for the tech space. It sets the tone for Facebook, Apple, Google, and all of them going forward, thanks to Netflix. But you've got IBM here now. You know, who knows what some of these other stocks are going to come up with as we go. Where did I put? By the end of the week, we've got U.S. banks, so we've got more financials. We've got Kinder Morgan, American Express, another financial. I always love looking at American Express's earnings, so we'll dig deep in that one. PayPal, they're just a couple names coming before the end of the week, so expect more back and forth. This chart over here to the left, you're going to see a lot more wiggles going on in there. Today was a great day, but I don't think the markets are out of the woods yet. I wish you a good rest of your day. Tomorrow on the Doe Show, I believe we're talking leverage, how to use leverage for your active trading, and what does it all mean? So we'll cover that. Enjoy the rest of your day or evening. Talk to you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.